Good evening, everybody. This is Johnny Seville. This is your executive summary for stock setups for the 5th of May. So we can see that the S&P 500 is still yet to break the open range. So we're still, again, just kind of edging along, kind of still holding the moving averages, but still underneath the resistance of this kind of upward channel we've seen on the S&P 500. That, of course, means that also on the weekly chart, you'll be able to see that we are also. Oops, let's go to the different template here. So there we go. We can go over to the weekly chart. And you can see, yes, we're still underneath this this upward head and shoulders that we've been alluding to could quite possibly be building here. So again, we're in a lockdown mode of oscillation here on the S&P, and of course we continue to look at the individual stocks for opportunities, mostly focusing on fallen angels, flags, or key breakdown stocks. The other thing to keep aware of is we are continuing to see that divergence in the high yield bonds, and this was something really noteworthy today, is that even though the market's been flat, we've actually had a divergence in the high yield bonds, which is what smart money buys if they like risk. If they believe in corporate America, they're going to be buying corporate bonds because they believe it's a good place to get a return. If they insecure about the American economy and don't like the risk in the market, these are going to be sold. And as you can see, while the market's been going sideways, these are actually going down, and we had a big decline here. Yesterday only 7.4 million shares traded. Today this drop accounted with 20.56 million shares. So that's really key. The other thing to take a notice of is take a look at the if we have a look at go to Open Insider and go to charts, you'll actually see the ratio of insiders selling versus buying. And one thing you'll notice since basically the middle of April is the difference has actually sharply risen. We had 314 sales here on May 3rd, only 56 purchases. So we can see that the difference is sharply moving away from each other as we start to head into May. So that's obviously something interesting, and you can see in a lot of the key pullbacks, such as in the end of 2015 when we had that almost 10% drop in the market. Again, sharp divergence started to occur in November. Of course, we also had the big drop in the middle of, in August, September of 2015. And again, look at the sharp divergence that we saw both in May and in August, preceding the drop. So those are some interesting things to be looking at. Now, in terms of course, looking at the oil, we mentioned last week that to watch for the West Texas Intermediate to break down. Of course, the key things we've been looking for in oil for many months now is the fact that crude oil has been in an upward channel, which is a bearish pattern. So with a breakdown now below 49, again, for those of you playing the oil trade we've been talking about, that's oil's already dropped 10% just from that key break of 49 that we were talking about. This now gives a likely target of around $39 to $40 on the West Texas Intermediate. So more downward room for it to drop from here. We've talked about obviously the oil plays that we've been focusing on. Apache, we talked about the puts on this. This is a nice downward day today, but bounced back above support towards the end. But again, this should hopefully bode well. Of course, we also talked about the Chevron puts on Chevron, playing that short. That one's had a nice drop here. So as you can see, that's the only risk here is the downward channel. So I do prefer Apache over the Chevron short slightly because of that reason. But one of the new plays that we actually found today that I liked came from our trading room, of course. PAGP. This one looks quite good. I'd look for a breakdown below 27.93, or a rally back up to 29.15. Either one. For an entry point. Okay, so that would basically, now in terms of stop criteria, I'd be looking at stop criteria at 30.23, and this could be a a momentum target, momentum play as that continues to drop. If we look at the history, there's plenty of room for this to get back down to the lows it was at the beginning of the year, the beginning of last year, sorry, around $15. So keep an eye on this one. And of course, if we have a look at how that compares to crude oil prices around the same time, again, you can see this would be similar kinds of levels in terms of where our target is on the oil. So that from $30 down to 15 potentially on something like PAGP. So for a potential options play on PAGP, I'd be looking at the $29 August puts, which are currently last traded for $1.95 today. So that would be a possible way to go about the option side of things. So there's that one. Let's look at the other short that I have for you tonight. IDTI has been on our watch list for quite a while. High price to cash flow ratio, good insider selling. So it's obviously it's in the semiconductor arena. It's been in this kind of long-term oscillation back and forth, and as you can see, formed a kind of a potential head and shoulders here, but never quite managed to complete that right shoulder. Rallied up, so we can see that there is inherent weakness there built into the chart. It just never eventuated earlier on in the year. But this now seems to be look like it's possibly rolling over. I definitely want to see it break down first, so I would wait for it to break down below 22.73, and if we can break that, I'd look at a first target of $19.13 and a second target of $17.33, coming down to these kinds of these two areas of support you can see on the chart, and I'd look at a stop signal of 24.13. Again, that's also something if you wanted to play options on. Again, I'd be looking for a few months out, say looking at the $24 or $23 puts. But that's kind of the main strategy with all of these, is if we're looking at options, looking at about at least kind of 3 months out for just slightly in the money or just slightly out of the money, kind of close to the current price as we can, with a bit of volume on the contract. Okay, so now let's flip over to the couple of longs that we've got for you. So again, with the market still being directionless, we're looking for things in both directions, and of course this one has been a long-term decliner. This one's really kind of been in the pits. You can see it came all the way down from $120, $130. If you look at this, you can see this is just starting to scoop up. So I really like this one. The money flow is going up sharply. It's something that I would give give it plenty of room to run. So this could be a good momentum play, and I'd look for it to pull back to 563 or look for a break of 602. So certainly still a momentum play with also a possible flag building, and so I would look at it, and I'd look at a stop signal down there of 517. Now if that did stop out, you can have a look at the hourly chart as to see why I picked that specific level. It could pull back lower than that, and that is one of the risks here. I mean, a kind of a safer stop loss to give it a bit more room would be looking at kind of below here, below this support of $5. So if a more conservative stop would say be around 491. And that's not even a bad way to go, because it just depending on what your risk threshold is. If it did stop out at 517, it'd be something I'd want to be looking to get back into again, kind of thing. So nothing wrong if you want kind of to look for a kind of a lower stop criteria around say 488 actually. But there's plenty of upside potential on this, and yeah, again, it looks quite interesting. So there's PTX. We've also got WKHS, which I also like the look of today. You can see this is forming a flag here on the hourly chart. So we're wanting to see this break above 310. This again looks like it's got some long-term upside potential. My first target would be 337. So yeah, looking at 337. So if it break 310, so like you could look at an early entry possibly now at 295. I'd probably look at a half position here and a confirmation if it broke above 312. So kind of to get a better average price around $3. I'd look at a yeah, first target of 337, but the longer term momentum play could be looking at as much as $5.17 as its second target, which is really what kind of interests me more in this type of trade. But those are the short and longer term potentials that I see there in the chart, and that comes in at just around the 38.2 Fibonacci between there and the 50 here, you can see. So there's a second potential criteria there for you. And last but not least, FEYE. This one, been watching this, that's also kind of coming out of a long-term consolidation. These are the kind of stocks I really like to find, is these long-term breakouts, long-term fallen angels. And on this one, I would be waiting for a break above 1463. And my first target there would be 1593, but I would again be looking at this as a possible momentum play, and I'd be looking at a stop criteria currently of 1362. So there's that one. Now, just to give you a quick idea of how we would look at some of the options on those longs, for PTX, I'd be looking at the $5 calls. 948 traded today. As you can see, that's unusual volume, seeing as there was zero open interest. So that's a very big chunk. So I'd definitely be looking at the $5 August calls on PTX. But WKHS does not appear to trade on the options, so that would be probably a stock only play. But so there they are. We got FireEye, WKHS, PTX on the long side, and IDTI and PAGP on the short side. So certainly some exciting stuff there. And of course, if you are missing out on these daily videos and trading rooms and our alerts, you can start receiving these on a daily basis for only $9 for your first month, and to give it a try and see how much extra padding it puts in your pocket. So to enroll and give it a go, it's acornwealthcorp.com/gold. We are going. This is probably one of the best times to give this a shot, because May is looking like it's going to be some really exciting stuff. There are lots of stocks coming down the watch list, and with everything going on with oil and the market, this is the time you want to have your finger on the pulse. So I hope you'll join us, and for all of your existing members, we'll look forward to seeing you next week in the next executive summary. Have a wonderful night and happy trading.